Hey guys, happy Friday. Let's go over some charts here and check this out. So, one of the guys in the Discord, there's a link in the free Discord below if you want to join. Pointed this out today in the group. He posted a video about this. So, basically, this here is the US 500 futures this morning. We're obviously looking at around here at the moment, 7:50 a.m. Down the bottom, we have the institutional indicator to give institutional indications if they're buying or selling. So, what's happened here is PCE data has been leaked before the official release. So, the release of the data was actually up here at 9 o'clock, and institutions have gotten the data early somehow. It's been leaked, and our institutional indicator is showing that they were buying down here. And then these topping tails here is the institutions selling into retail. And obviously, we get that same indication here that they're selling into retail. So, very, very interesting that the institutional indicator has picked that up and it correlates correctly with the chart as well. So, very, very good for that side of things. Now, when we have a look at bonds today, so here we have the 30, the 10, and the 2. We've had this inverse head and shoulders pattern breakout on the 30. We're about to break out on the 10, and the 2 is obviously lagging a little bit behind. So, what's happened with the PCE data? It's obviously come out cooler than expected, and because that has pushed up yields like this, money is flowing into the yields because it's easy returns in there. You guaranteed it's one of the safest assets you could invest in. So as such, gold, Bitcoin, and equities all fell today. So very interesting here. Bitcoin obviously on the left, gold on here on the right. You know, we've made a top here in Bitcoin, gold soon after, and then we've both crashed down together because obviously money is at that point flowing into the bonds market, into the, secure locations to earn some money in there. Same thing basically happened on the SPY. When we go to a 1-minute chart, we can have a quick look. We had that happen here. But back to the daily, let's have a quick look at the daily chart. So today we have closed above this blue line, which is the 5-year parallel channel. I've shown you this on previous videos. Bit of a doji candle, which is at a high and looks pretty similar to the 28th of October. And obviously, we all know what happened the next day after that. However, when we go over to the actual market, SPX, we've closed within its upward rising channel, and we're still not at the peak of the 5-year parallel where we had the rejection last time. So slightly bullish, but also there's a whole bunch more going on underneath. So when we have a look at the bellwether indicator, we've got some bearish divergence that happened before the crash, and obviously markets were going up. We've got the same thing happening again right now. So we're seeing that divergence there where markets are essentially flat to up and everything else is actually indicating that we're about to go down. These two areas over here look extremely similar, so we should be paying close attention to this. When we go over to the Qs, we've been bouncing on the underside of that resistance, trying to break through. Today we tried to break through, we've rejected. Also bearish, but given the fact that we've had 4 days attempts at it, we're either going to break through or break down soon. So one or the other. The VIX at the moment, we are making pretty low lows. So this is going to put a lot of complacency out in the market where people think everything's all good, all great. But as you can see here, we're about to start getting that MACD to curl up. So keep an eye on it for the next few trading sessions. When we go to the VIX front versus back month, when we get into this red zone, so the 1.21 to 1.3 zone, there's only one way out of this zone, and that is down. So the market will pull down. Doesn't mean we can't stay in here for a bit and bounce around, but we are going to break down when we cross this 1.21 line. That will trigger our sell signal and give us that indication of markets about to roll over like previous signals. So, and we also obviously have buy signals when we go below and back up above again. So we'll keep an eye on that as well. For Brett at the moment, it's not doing too bad. 65.2% of stocks are above their 20-day moving average. Obviously, we just need to keep everything in mind and what is happening out there. Gold on the 2 hour, I called this back here 3 days ago saying we're about to downtrend, and we obviously did. Here, it was at like 3:30 in the morning my time in Texas. I actually got a buy right here at like 383.20 or something, I think it was. Played that really well to the upside, sold in here, bought and sold this quite a number of times, made quite a bit of money out of it. We're obviously still on a 2 hour chart here. We are downtrending again. Here on this orange line, we've got a really long term support going back to December 23. So we're more than likely going to bounce off it. If we don't bounce off it, then we'll bounce off the support from the rising wedge. That's what I'm expecting. If we don't bounce off those, then we'll break through. If we break through, then run for the hills. I don't think that's going to happen, but be open to all possibilities of what could happen. For the dollar, trending down at the moment. Obviously, it tried to make a bit of an attempt today, but it's still trending down. So that's about it for the wrap up. Have a good weekend, guys. Hope you have a good one. Bye.